watching Your Money Matters at NDTV Profit. I am Mahima Vachrajani. Today's topic of discussion is hybrid funds. Well, the way markets are falling, is it the right time to enter into hybrid funds? This is the topic that we're going to discuss today with Rushabh Desai, who is the founder of Rupee with Rushabh Investment Services, who is joining us now. Rushabh, a very good evening to you, and thank you so much for joining us. As I mentioned, that hybrid funds is something that we are going to discuss today, and as I was also referring to markets falling so much, do you think that is this the right time to make an entry into hybrid funds?
Hi, Mahima. First of all, thanks so much for having me on the show. Mahima, to put it very simply, first one needs to understand why they want to invest in the hybrid category. See, hybrid category has multiple categories within them, which is aggressive hybrid, conservative hybrid. There is balanced advantage fund, which are also known as dynamic asset allocation fund. There is something called as equity savings fund, right? So see, in my humble opinion, one should look at hybrid category for two purposes. One is that who wants lower volatility, and second, who wants steady appreciation. So just because markets have fallen down, that does not mean that you should shift to hybrid funds. If your risk profile is aggressive, if you have a long-term time horizon, on the other hand, this is a very good time to pump in more money in the equity market so that one can get superior double-digit risk-adjusted returns over the longer period of time.
Okay, and in your opinion, if one chooses a hybrid fund as a part of their portfolio, what are the advantages that come with that? And also in terms of an overall portfolio, how do you deploy funds in a hybrid fund? Like, what percentage of your portfolio should be hybrid funds?
Mahima, I'll answer the second part of the question first. See, what percentage, it truly depends on the risk profile of the investor. If the investor, say, has 100 rupees, if the investor is not able to take high volatility, high risk of that 100 rupees, what he or she wants to invest, and if the investor doesn't want to take a long-term bet, right, then hybrid category or hybrid funds will suit them the best, right? I truly think that this is a very good time, Mahima, to invest in the pure equity segment. But there are 2 to 3 hybrid categories. What I can recommend to clients is, one is the dynamic asset allocation category, which is dynamically managed between equity and debt, and second is the equity savings funds, whereby the fund manager will invest probably lower allocation into pure equity and the rest into arbitrage and debt. So equity savings fund is a little bit for, say, like conservative investors who are looking for little higher returns than the fixed deposit or debt mutual funds. And balance advantage or dynamic asset allocation funds is actually meant for those who are looking for lower volatility, little bit of downside protection, and steady appreciation over the long period of time.
All right. And in terms of the typical risks that are associated to a hybrid fund, what are those like, and what should one keep in mind before investing into hybrid funds?
See, hybrid funds do invest in equity, so there will be risk. See, in today's time, for example, say the balance advantage category, there have been many funds where the drawdowns has been as par or at par the Nifty 50. Okay, so you need to cherry pick the product thoroughly. You need to understand the product within the hybrid category also. Say, for example, in the balance advantage category, there are two types of funds. One is pro-cyclical, which is more aggressive towards equity, and one is counter-cyclical, which is conservative or valuation conscious in that sense. So if one wants proper downside protection, then going for a counter-cyclical or a valuation conscious or a cautious kind of a product makes more sense. And if someone wants little bit of a higher returns than the traditional debt mutual funds or fixed deposit, then equity savings funds work best. But within the equity savings funds, one need to keep in mind that the pure equity portion should not exceed more than 25%. So, overall, moderate kind of risk appetite works best, but cherry picking the right product within the categories is very important, Main.
Okay, got your point. And in terms of one's risk profile, what should that be like in order to be, a better option in terms of investing in hybrid funds?
Can you rephrase the question? I'm not able to understand
So,
it
so
correctly.
I want to understand that what should be one's risk profile in order to, invest in a hybrid fund, because it will depend on the, person's overall portfolio as well, right?
The overall moderate risk takers can invest in the hybrid category. But as I mentioned, for example, say like there is a category called aggressive hybrid funds, which invest more than 70-75% in the equity. So that is actually not meant for moderate risk takers. That is actually meant for high risk takers. Now, if you say like a balance advantage fund, then a moderate risk appetite investor can invest in that category. Equity savings funds, also a moderate risk taker, can invest in this category. But again, as I mentioned earlier, that cherry picking the product is something what I would truly encourage investors to do.
All right. And in terms of these hybrid funds managing their overall balanced risk, what funds right now are you finding attractive, which have allocated their money well in terms of your equity, your debt, gold, REITs, etc.?
See, what you are talking is a multi-asset allocation fund where you will find two or three asset classes within one product. That is equity, debt, REITs, gold, etc. Now, see, although these products may not be very volatile, but multi-asset funds can be little cyclical from time to time because the fund manager needs to take very precise calls in multiple asset classes. So now this is what I encourage investors to do, is that if someone wants to invest in multiple asset classes, keep your portfolio separate from a better risk mitigation point of view, right? Keep your equity portfolio separate, keep your debt portfolio separate, keep your REITs, which is real estate portfolio, separate, and keep your gold portfolio separate. And then you can decide the appropriate allocation in each of these asset classes. You cannot invest in one product and say that, okay, my asset allocation is taken care of. No, because every fund will have a different strategy, Mahima. So I would suggest that even if someone is venturing in the multi-asset or the hybrid category, especially which is tilted towards equity, then they should consider that product or the category in the equity space, not in the conservative space, Mahima.
Got it. I completely agree with that point, Rishabh. And as you rightly mentioned, to keep your different assets as consider them as different portfolios. But for somebody who's already invested in a hybrid portfolio, we've and is looking to probably invest more in a hybrid portfolio, we've seen that gold has risen over 30%, in INR terms, and 40% overall in USD terms. Do you think that investing in a hybrid counter which has gold exposure is still attractive at these levels?
Mahima, I don't think so, because see, gold is a very cyclical asset class and it works more or less on the demand and supply side as well, right? So I think if someone wants to take exposure to gold, then probably venturing in gold separately or buying physical gold or gold fund of funds or gold ETFs is something what I would encourage. At this point of time, see, gold may shoot up, but it may not shoot up as aggressively as what we saw. I think buying gold on dips, saying like 2-5% kind of corrections, is something what I would encourage. But if someone wants to invest in the hybrid category, then if a balance advantage category is something what I would encourage investors to look at, who are little bit tilting towards equity, and someone on the conservative side who do not want to take too much of risk, then equity savings funds is something what I would encourage.
All right. And in terms of taxation, how are these taxed?
Multi-asset funds will depend on the strategy, whether they fall into the equity taxation or on the debt taxation. But the other hybrid categories, like for example, which I just mentioned, which is the balance advantage fund and the equity savings fund, they will follow equity taxation, which is short-term capital gains at 20% and long-term capital gains at 12.5%.
All right. In terms of retail investors who are considering investing in a hybrid fund, how do they evaluate? How do they go about evaluating the expense ratio of hybrid funds?
Expense ratio is something one should consider at the bottom of the priority list. there are 2 3 aspects when you consider a hybrid fund. Particularly, I'll give you two examples, because within the hybrid space, I'm not recommending all categories. I'm only recommending balance advantage and equity savings fund. So I'll give you two different scenarios, Mahima. See, when you choose a balance advantage product, first of all, whether the product is giving you proper downside protection or no, number one. Number two is that whether the product is delivering consistent returns over probably say 3 years or 5 years daily rolling returns or no. And then probably you should look at the expense ratio. So expense ratio for any active category, for any active fund, should be at the bottom of the priority list. Coming to the equity savings fund, again, I would look at whether the funds are true to labor or no, whether they are sticking to their mandate and not exceeding too much into the equity side or no, whether they are giving proper downside protection or no, and most importantly, whether they are maintaining the consistency in the returns or no. So these are the 2 3 parameters what I would look at first, and then probably look at the expense ratio.
All right, and also in terms of the changing market conditions, right? Can you share examples of how hybrid funds have kind of adopted the changing market dynamics over the recent years?
Now there is a very beautiful product called ICICI Balance Advantage Fund. Now they have been very active in taking calls. Say, for example, when valuations were very expensive a few months ago, like the fund manager and the AMC, especially S. Naren, was very vocal in saying that valuations are very expensive and one needs to be absolutely careful in deploying lump sum money. So Balance Advantage Fund is a pro-cyclical fund and has been following the strategy extremely well. So when the valuation turns expensive, they actually dropped down their pure equity exposure and ventured into arbitrage and debt. And now that since the valuations have turned out to be reasonable, they are pumping in more money in the pure equity segment. So in terms of balance advantage fund, I like two products. One is the ICICI Balance Advantage Fund, and second is the Edelweiss Balance Advantage Fund. Edelweiss is more on the aggressive side, and ICICI is a little bit on the moderate, on the conservative side.
Okay, and in terms of retail investors who are using, hybrid funds to achieve their long-term financial goals, what is your advice to them in terms of planning their overall portfolio?
See, I think if someone cannot stomach volatility, then a balance advantage fund and hybrid fund suits and works best. But if someone, because see, even hybrid funds will have their limitations, Mahima. Okay, if you're expecting superior double-digit returns, then you will only get those superior returns from pure equity mutual funds. Okay, whether it is either you go into the stocks or index funds or active funds, whatever you want to do, right? But superior double-digit risk-adjusted returns can be delivered through pure equity funds. But if someone does not want too much of volatility and someone is looking for proper downside protection, then even in this market condition, conditions, investors should venture into the hybrid or the balance advantage funds.
All right, and in terms of one last question to you, Rishabh, multi-asset versus dynamic asset, how does the performance of these two differ, and which one do you prefer?
See, multi-asset is a fairly new category, Mahima. Okay, dynamic asset allocation has a good track record over the period of probably more than a decade or so. So I would still recommend dynamic asset allocation funds because it involves only two asset classes, which is equity and debt, which is easy to maneuver also. Now, if someone wants multiple asset classes, then from a better risk mitigation point of view, then I would encourage investors to create separate portfolios, equity, debt, gold, REITs, etc. But multi-asset, again, I'm not against multi-asset, but it's a fairly new category. I would like the category to prove its mettle furthermore. But at this point of time, dynamic asset allocation funds, also known as balance advantage funds, is something what I would recommend.
All right. Well, Rishabh, thank you so much for giving us those insights. I'm sure that our viewers will benefit from this, and thank you so much for taking out time and speaking with us at NDTV Profit.
Thank you so much, Mahima.